This is Trade Flow News, bringing you relevant news and insights from around the world. Trade Flow News, enabling trade for SMEs and economies worldwide.
Welcome back to Trade Flow TV. You know the drill. Markets move fast, and if you're not ahead, you're under. It is Monday, July 20th, 2026, and the highly anticipated G7 Emergency Weekend Summit has officially reshaped the global financial landscape. The rumors we tracked heading into the weekend were dead on target. Western governments have stepped directly into the plumbing of the hard asset economy, ending the era of free market price discovery for critical technological inputs. Let's get you caught up for an extraordinary Monday session. First up, the 60-second commodities flash. G7 mandates the strategic metals freeze. Following emergency closed-door sessions with top AI and semiconductor CEOs, the G7 has officially invoked national security protocols. Effective immediately, sovereign allocation quotas have been established for all domestic physical copper and silver supplies, locking down commercial inventories. Meanwhile, physical OTC silver remains unanchored. Private over-the-counter transactions are operating in a parallel reality. Industrial buyers boxed out of official channels are aggressively paying extreme private premiums to lock in immediate physical delivery from unrestricted miners. Brent crude holds high ground. The energy floor has stabilized following last week's vertical run, with Brent trading aggressively at $129.20 a barrel. The corporate credit market remains under severe pressure as logistics firms reprice their structural fuel overhead into the third quarter. Finally, CPG equities face systemic revenue caps. The digital food rationing matrix is showing its true impact on corporate visibility. With supermarkets strictly enforcing account-linked volume quotas, bulk consumer volume has completely vanished, hammering gross margins. Let us take a deep dive into how the G7 strategic intervention fundamentally upends corporate manufacturing timelines, and why physical asset ownership has completely decoupled from traditional derivative markets. Resource nationalism is now the core playbook of the developed world. By stepping in to dictate who can purchase raw industrial metal and at what price, the state has effectively superseded the open commodities exchange. For high-growth tech firms, this introduces a brutal operational bottleneck. It does not matter how deep your corporate balance sheet is right now. We are seeing the immediate formation of a strict two-tier economic structure, a regulated tier and an aggressive, highly illicit private market. This brings us directly to the structural logistics premium. With Brent crude entrenched near $130, the maritime freight network is operating under severe capital strain. This is no longer a temporary supply shock. It is a permanent logistical baseline that guarantees sticky inflation metrics well into the back half of the year. Look closer at the enterprise margin freeze. The deployment of armed escorts for bulk agricultural freight has institutionalized high transport security costs. Grocery chains are forced to absorb wholesale agflation without the ability to pass it on to a tapped-out consumer base. Corporate forward guidance is broken. Here is the trade flow take. The rules of global commerce were officially rewritten over the weekend. In a command economy, paper liabilities are a vulnerability. Maintain your unyielding alignment with frontline energy producers and unrestricted domestic physical extraction miners who hold direct title to the underlying assets. Completely eliminate exposure to highly leveraged technology developers and consumer discretionary equities that remain highly vulnerable to supply rationing. Head to TradeFlow TV to keep your analytical pipeline synchronized. Stay liquid, stay sharp, have a defensive Monday session, and we will see you tomorrow.
That is all for today's news on commodity markets. Stay tuned to Trade Flow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at Trade Flow News, which allows you to watch our program on your mobile device or desktop to receive information from there.